Carl, good morning, everybody. Happy Monday to you. Look, inflation's a difficult thing. Too much is a bad thing, and too little equally dangerous. High inflation's linked to high unemployment. Bosses can basically sit on their capital and let it rise in real terms while their debts are reduced by inflation. They've got no incentive to hire or to put their capital to work. Low inflation is largely caused by consumers and businesses being too frightened to spend, and that's compounded because when inflation's low, so is wages growth, so there's even less incentive to spend more. Australia right now is in a low inflation cycle. Low growth, low wages growth as well. The consequence is low interest rates, the lowest on record. The hope or expectation is eventually that low rates stimulate broad spending and investment, and that kicks the economy into a new growth phase. Now, when that growth in wages, profits and inflation comes, then the interest rates will start to rise. Now, this week, Wednesday, the latest inflation numbers come out. They're the key to future interest rate decisions. The Bloomberg survey of economists on Friday suggests the annual inflation rate will tick up to 2.2%, with underlying inflation still below 2%. Now, this is still too low for the Reserve Bank to consider interest rate rises, and chances are it'll wait until inflation is persistently above 3% before it starts to even consider rate rises. But it's also true to say inflation is picking up slowly, compared with last year when there were quarters of negligible price growth, one even when prices went backwards. Now, right now, money markets, according to the yield curve, are expecting the first rate rises to come around July or August next year. At this stage, only one's predicted, and that's not normally how rate rises work. There's generally more than one at a time. So perhaps the rate moves are very late in the next year, perhaps two very late December, November next year. But partly this all depends on inflation. The Dow Jones on Friday down by 31 points, the dollar off a bit over the weekend this morning, 79.12 US cents.